Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about the in the money covered call. What we're going to do is buy a stock, give it away cheaper, but the call buyer, the person who pays me the cover call premium, they're going to pay for the difference between where I buy the stock and where I'm going to give it away. Now, I'm going to explain all of this because the in-the-money covered call can be very, very profitable, and it can give us more downside protection, and quite frankly, it's a very conservative trade. We're going to talk about the in-the-money covered call and how it is absolutely driving my weekly covered call profits to where I'm knocking down some $5,000 and $6,000 a week, and we're doing this every single week. Stick around. I know you're going to like this one. Now, hey, look, this is what we're doing. We are talking about the in-the-money covered call. I'm going to show you how I'm generating thousands of dollars a week. Now, after looking at this month, May 2024, where I'm already at $27,856. It is May 19th. We are absolutely knocking the leather off the ball this year. And I'm looking at my May numbers and I don't see too many in the money covered calls. But if you remember, throughout the year, I have been using the in the money strike, just absolutely tearing it up. And you can see right here, we've done multiple ones. I could go down the list, probably doing 30 to 40 of them in the past 6 months. Tell you what, I absolutely love the in the money covered call. Now, the reason I love this strategy so much is because in this stock market, where the stock market is literally taking 2 steps forward, 1 step back, 2 steps forward, that can translate into a couple point move when you're using 3x leveraged ETFs like I do. So when I'm using the TQQQ or TNA or any other of the 3x leveraged ETFs that I use, moving back a couple points is not out of the norm. So I love to write the in the money covered call, and we do a 5-day for the most part. And what we're looking to do is generate anywhere between 1.2% and 1.7% if we can get it. So of course, the more volatile the stock we're using, the closer we're going to get to that 1.7%. Now, I'm going to show you the money I make, but what I want you to understand is this. Somebody asked me the other day, is this a good trade? And I told them point blank, if the money is right for you and that makes a good trade for you, then it's a good trade. But I'll tell you what, people on Wall Street are not measured by the money they make because they're flipping billions of dollars. They look at everything from a cash on cash percentage gain perspective. If you can't beat the S&P 500's annual return, which is historically 8%, you won't have a job very long. Okay? So always try to base all of your successful trades and what you think is a successful trade on the cash on cash percentage gain, because that ultimately dictates whether you're a good trader or not. Look, I know guys out there that are spending $50,000 a week and it all looks good. But at the end of the day, are you beating the S&P 500? And if you're not, then that's not a good trade. It's nice to put money on the table, but what I'm here to tell you, man, is this is the long game. Okay, if you're into the trade, that's one thing. But if you're in this for the long game, well, you need to be beating the S&P 500, and we can beat them hands down selling premium. If it's all about the money, it's all about the money. You go for it, and I'm going to tell you what, do the best you can with what you got, right? Well, I'm also going to say that for you small ball players. Do the best you can with what you got. And if you're taking on a trade where you're only making $80, and let's say, for example, that $80 doesn't make you happy. You don't get up in the morning looking to make 60 to 70 to $80. What I want you to do is flip this upside down. I don't want you to think about money anymore. I want you to think about the cash on cash percentage gain that you can make, because at the end of the day, that is what people will be measured by. That's how I started. When I did my very first trade, it was all based on making 4%. I had one stock. I made 4%. And I'll tell you what, in this era of paying big props to Warren Buffett and how he's this investing legend, that's how Warren Buffett sees it. He's got to make the percentages, and it's got to make sense. His money's got to be put in play, and he's got to be maximizing his returns based on the money he invests. That's thinking wealthy. We need to think wealthy. So now, with that said, let's go ahead and talk about thinking wealthy and trading wealthy. We are talking the in the money covered call. And I'll be honest with you, it's really fueled a lot of my profits this year. Late last year, if you remember, I was using Coinbase. I was doing these deep in the money covered calls on Coinbase, absolutely knocking it down, making some $2,500 a week. I got addicted. I did, because now I want every single in the money covered call trade, which is typically 7 to 5 days. Well, I want it to make me $1,000 a trade. And I'll tell you what, that is easier to do than what you might think. Now, granted, you have to have some capital here, but for the most part, if you use stocks like Yin and TNA, like I do, well, if you get comfortable with them and you understand that they're volatile, man, you could profit from them. And to the tune of some 1.2 to 1.5% weekly. Remember, if you're selling premium, you want to make at least 1% a week. And if you could do that week over week over week, well, you're absolutely beating the stock market hands down. Let's go ahead and talk about a trade that we did with the TQs. You can see it right there. It's going to be on March 9th. This is going to be basically a 1-week trade. Now, what you need to know is this. In the description below, I have a membership offer for you. This is an email I sent to the members as a trade alert. We're looking to knock down 1.5%, and I sent that to the members. This is what I do when I send out trade alerts to my members. You're going to get access to all these trades that you see me completing. They saw the trade as it went down. You didn't see it here on YouTube, but they saw it, and they see all of the trades. They also got exclusive videos talking about some of these trades and how I was going to manage them. And for all you poor man cover call traders or wannabe traders, I want you to see the purple here. Those are all poor man cover call trades, and we have at least 5 of them right now that we're doing. If you ever wanted to get involved in a poor man's cover call and learn from an expert or a pro like me, yeah, if you watch my poor man cover call videos, you'll know right off the absolute bat that others absolutely don't know what they're doing when it comes to utilizing the poor man's cover call strategy. They'll talk about it, and maybe they have had success. But I'll tell you what, get in the trenches with me. You will know everything about your leaps call options, your deltas, the short sale, everything that comes with the poor man's cover call that can absolutely snap you in the ass. I've been there, I've done that, but now I make money using the poor man's cover call. You want to sign up, you'll want to be a member. I have a free membership. They get all of those trades. Now let's continue with the in the money covered call. Most people do not understand the in the money covered call, so we're going to talk about this. I just sent a members video on 2 trades that I bought back. I bought back early. One of them was an in the money strike, and we talked about it. I broke it down, and quite frankly, I'm getting a lot of people saying that video helped them understand the in the money covered call. Here is the setup. TQs, and I'm going to show you the charts. Stick with me. I'm going to show you on the charts where we're at with this trade. The TQs was trading at 58.77. I dialed up this trade using the in the money covered call calculator that you can download from my website for free. I don't sell you or spam you. You just download it, you use it. You have to use it because you get to see your profitability for this trade. In fact, I use this every time I do a poor man's covered call. So in this case, again, I bought the shares at 58.77. I went ahead and bought 1,200 shares. We're going to absolutely use $70,000 for this trade. I feel so comfortable with it. We're going to load up and we're going to sell these shares at 57. Now they paid me $2.69 for this trade. That turns out to be 1.57% cash on cash. We need to understand what is profit and what is not. And this is where you're about to get good. Notice, when I bought the shares at $58.77, I'm giving them away cheaper at $57. So right off the bat, you're thinking to yourself, look, dude, you're losing money. Well, not really. Because in the options game, if you do an in-the-money covered call, the option buyer, the guy who's going to pay me this $2.69, he has to pay the difference between $58.77 and $57. He has to pay it. There's no free lunch here. he pays it to me as a part of the premium he's going to give me. Well, you can see it right here. Here's our total premium, and $1.77 of that is intrinsic value. Intrinsic value being that difference between $58.77 and $57, where I'm going to give them away. That's paid to me. Okay, so that part is paid to me. Now, I don't make any money on that because I don't make anything above $57. All right, that's very important. I'm giving them away at 57. I may have bought them higher, but I make nothing more than 57. But that's okay, because look at the time value premium profit on this trade. That's what the difference is. $2.69 minus the intrinsic value, for which nobody makes money, equals 92 cents a share. Now, this trade was about a 5 to 6 day trade. So I make on 1,200 shares some $1,104. This turns out to be a 1.57% cash on cash trade. Remember we talked earlier where if I was going to put my money on the line, I want to make the cash on cash percentage gains that someone like Warren Buffett would do. He would do a trade like this not because of the money that it would return. He would do it because of the cash on cash percentage gain. See, when you're putting any money at risk and you can make 1% a week, you are knocking it down, and that's what we want to do. If you're buying a stock and using it for 30 days, well, you want to make 3 to 4%. That's when you know you're doing it right. It's not about the money. This money right here could be $10,000. But if I'm investing $1 million, well, that's not that good of a trade. In fact, I'm not using my money effectively. Let's go to the charts. We're going to talk about this trade a little bit more, just so I want everyone to understand how this works, okay? The in the money covered call means I'm going to buy the shares wherever they're trading. And in this case, they were trading in and around $58.77. Well, we went ahead and told the greater stock market we're going to give them away cheaper. And because we're going to give them away cheaper, we're going to get paid. We're going to get paid both the intrinsic value of where I bought the shares and where I'm giving them away. See, there's no free lunch there. He's going to pay me that. Now the question is, how much time value premium do I get paid? Right? Because he has to pay me for the time for which I hold the shares. And that turned out to be 92 cents. And this is where, using 1,200 shares, we were able to generate $1,104 in this 4 to 5 to 6 day trade. I'll tell you what, using the in the money covered call is awesome, because when I buy the shares at 58x, I'm going to give myself a little bit of downside protection. Because look, over the next 4 to 5 days, the stock could drift lower. And this is what I love about this trade. You got to think of it like chess. See, this is the first move in my chess game with this stock. But I have another trade dialed up, which would be move number 2. Say the stock fell to basically 57 by next Friday. Well, now they do not take my shares because it falls under 57. Look, he didn't want to buy my shares at $56.99. He wanted to buy them at 57. So what happens is I keep all that premium, which turns out to have most of it being intrinsic value or downside protection. So when I buy them at $58.77, my cost basis is not $58.77 anymore. He paid me $1.77 in intrinsic value, so that means my new cost basis is $57. When the stock falls and drifts below 57 after that 5 days, now we still own the shares, and what do? We write a next week covered call using the 57 strike. And chances are we could pick up with TQs some $1, maybe even $2 to be honest with you. And that's how we do it. We make the 1.57% on this trade. And if they take my shares at 57, hey, we made max profit. How many times you go to a party and somebody say, hey, how many times have you made max profit? Well, I'll tell you what, a lot of those buy and hold speculators, they can't say that every time. But we selling premium warriors can. That's what I love about this, because here's the deal. After I write this trade and I make the $1,104, I take all of this money and dump it into a dividend paying stock, and we make money over and over and over again. See, this is the blueprint to wealth. You use your stocks, you use your cash. You then take those premium profits, the premium profit I just talked about, and we buy a passive income monthly dividend paying stock for which will pay you for doing nothing. Do you see how money can be leveraged to generate more money, which could be leveraged to generating even more money? Listen, at the end of the day, it's all about success. This trade, I don't care how much it was worth. If I win, that means I'm winning. And that's what I want to do. I want to win as much as possible, because when I'm winning, that means I'm making money, because that's what this is all about. See all those green trades right there in the middle? That was for April. How about March? You want a little taste for March? This is what I do. This is what the members see. I am a professional stock trader once I retired at 55 years old just 2 years ago. And this is what I do every single day. Knocking it down, sending all these trade alerts to my members, but more importantly, I try to educate them. I try to up their game. They don't make the mistakes that so many traders on YouTube here find themselves falling into. You don't have to do that. And I'll tell you what, one of the things that I love doing, and you know this if you've been watching my channel, I always like to talk about great entry points in stocks. And that is a common theme, because that's where I went from being bad to average, then a little bit better, and now pretty much spot on. See, I used to buy stocks here and here and here. Now we're always looking to buy them here, and I identify those all the time. And we set ourselves up for more favorable trades, making money, and then taking that money and buying dividend-paying stocks. We go from the trade mindset to the wealth mindset. It's all about thinking wealthy. It's all about acting wealthy. It's all about being wealthy. Hey, look, I have a free 1-month offer waiting for you in the description. Sign up and you'll see all these trades. You'll see everything that everyone else is seeing that you don't see on YouTube. Hey, look, I'm pulling for you. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.